Good afternoon. This is Chris Brecher with the Simpler Stocks free video for February 10th, 2016. As you see, it's about 3 minutes after the bell. Basically, what we're getting in here is the ideal, what I was talking about, the divergence now between the transports and the SPX that I had warned might happen really about a month ago. Let me show you what I'm talking about in here. That basically what we get in here was a sell-off of the ESs that would sort of start taking a mind of their own, why the transports slowly start going up. All this is doing, let me show you on a chart what I'm talking about here. So I was talking about the market being led down by the transports. And let me take off the future so you can see what I'm talking about here. And I've talked about that ever since the squeeze right here in the ATR sell stop signal right here, which was really in early October, early 2015, that the transports have been in their own little bear market here. What did they do? They got right down to where they were in October 2013 and they bounced. And this is what I had mentioned, that there's a certain point where the SPX has been holding up until finally it pays attention to the transports. By then the transports start rallying, and then the SPXs start to have a mind of their own, sort of to fulfill this whole Dow theory idea. Now, the problem you're seeing in here is that you see the transports rallying, but all they're doing is working off an oversold condition. Now they're getting right to their moving average, and you're watching that the SPX hasn't even gotten close to the moving average yet. I mean, it's closer than it was, but really, if it wanted to go to where it was in October, right here, that October 2013 level, you're talking about 1700. Now, that's only 150 points away, and you have all this doom and gloomer. That's not that big. Now, how else would you measure this? I have 10 million people that I see on Twitter that are measuring some head and shoulders from here. This is how I like to measure it, like this. Right here where you broke down and now you tested it from underneath. Now, you might ask, why did I do it this way? Look on the left and look at the transports and how, well, it's actually the transports and how you draw it. I draw it like this, where it came down, tested it from here. Why do I do it like that? Because if you measure that, it goes to right here. If you do it this way and measure it, you're talking about 2134, 1934. Let's just round it off. So it's 200 points, which gets you to 1730, which, voila, gets you right to the October 2013, the highs of 2013, which then becomes support. So the measuring implication to me is from here, just like the measuring implication on the transports was in this area. It's not perfect, but in this area. And that's how I measured it. If you look here, this was 1,300 points. Now I'm going on the fly. I hope I'm right here. 1,300 gets you to about 6,800. Where are we? 6,800. That's why I draw it like that. So that's what I think the SPX, the expectation eventually is. Now, the problem you get in here now is you get on the Dow Jones transports, where you get this in here, where now, let me put it on a 195 so you can see what I'm talking about, where a lot of people thought this was some kind of bear flag, and it just keeps going up. Then what you see on the SPX on the right on a 78-minute, well, 195-minute, I'm sorry, is you had this sort of bear flag, but all of a sudden they started diverging, where the transports kept going up, but you have the SPX going down, which makes perfect sense because the SPX has been lagging the sell-off so much. It would make perfect sense for it to undercut and go down here. Because remember, the transports have way underperformed. Makes perfect sense. Now, even today, we've seen the stocks that I posted, and I sort of bragged about, sorry about that, on the Simpler Stocks forum yesterday, that I showed on the Simpler Stocks free video, was on the forum yesterday morning at 5:48. I was posting a bunch of charts that were in the transports saying these stocks are acting great, and if we rally, these are the ones to kick in. Check this out. Look at KSU in here. Check this out. Both of these just absolutely outperforming the UPS and KSU. So in a bad market, you still found some things that look great. So I just wanted to show you. These are some of them that we show on the Simpler Stocks Premium chat and in the videos that we picked as buys in this horrible market. And we picked them because they're transport stocks, and the transports had already hit support. So we were talking about those would probably be the leading stocks to react off support. And it worked great. So like you know, we have a $7 30-day trial. We've had well over 1,000 people take us up on it. And the retention rate of the people that have taken us up on the offer and then stuck with the monthly service has been astronomical. And I'm very flattered. But we try to put a lot of attention into it. We post a lot of charts. We kept everybody on the right side of the market. And as everybody knows, I usually respond to emails within an hour. So thank you very much for listening. I hope to talk to you tomorrow. Take care.